Good evening, everyone, and thank you for joining me tonight. My name is Garrett Boyd, and I am a financial advisor with Northwest Financial Advisors, a wholly owned subsidiary of Northwest Federal Credit Union. I'm joined by Jorge Fuentes, a founding partner of Meritage Wealth Insurance Advisors. We work together to assist clients in obtaining the insurance coverage they need to protect their personal and business assets, their family, and future. Northwest Financial Advisors partners with Meritage Wealth Insurance Advisors to offer business owners top quality insurance protection products. You can learn more about our respective firms by visiting our websites as shown here. I'm happy to have Jorge take a deep dive into the benefits of key person insurance for your business. And just a little background on Jorge. He is a founding partner of Meritage and has over 23 years of experience working with clients to structure and incorporate insurance as an integral component of their comprehensive wealth plan. Jorge specializes in estate planning, executive benefits, and business succession planning. As a legacy wealth insurance specialist at Wells Fargo, Jorge spent 20 years working in the DC Capital area to implement insurance strategies to help grow and protect client assets as part of their overall wealth transfer and legacy goals. Jorge is a former United States Marine Corps Staff Sergeant. He graduated from the University of Maryland Business School and holds his Chartered Life Underwriting designation from American College. Now, this graphic that we pulled up here shows Northwest Financial Advisors' Circle of Financial Life. Now, rather than simply buying and selling stocks, we address each of these areas that impact your financial wellness, always with our focus on you. We feel that to be doing a good job for our clients, we need to touch on all of the items shown in the circle. And here are a few examples. Cash flow. Where is it going to come from in retirement? Do you have a plan? Risk management. Does it make sense to carry life insurance? Tax efficiency. Should you consider paying a little tax now to avoid a lot of tax later? Distribution. What money will be used for month-to-month expenses and what will be used for one-off big ticket items? Estate plan. What can be done to make certain your money goes where you want efficiently? Now, how may your thoughts on this change over time? The Circle of Financial Life represents what we all need to be thinking about, whether we are running a successful business or approaching retirement. Now, Jorge is with us today to discuss the risk management portion and how insurance can add some needed protection. Next slide. Yep, thank you. Now, please allow me to read these important disclosures. The information contained in this presentation is for educational purposes only and not intended to be a substitute for specific individualized advice. We recommend that you consult with your advisor for guidance specific to your unique situation. If this presentation is conducted as a webinar, please be advised that the presentation is recorded for the purposes of sharing content. All attendee questions will be removed from the final recording. Without further ado, I'd like to pass it on to Jorge to share a little bit about key person insurance.
Great. Thank you, Garrett, and good evening, everybody. Thanks for your time today. And today we're going to discuss key person insurance. When and why is it needed, plus how key person life insurance plan can be structured. So every business has at least one key person. A key person is someone who is key to the financial success of the business. If something were to happen to that key person, the business would suffer financially and could even jeopardize the financial future of the business. The potential loss of the key person must be planned for. Life insurance can be a part of the business owner's plan to offset any financial loss stemming from the loss of the key employee. Most business owners know who the key employee are, but if you don't, here's some questions that might help. So what is the concern? Every business has one or more key people. Economic importance of the key person, the potential impact from the untimely loss of a key person, and employers sometimes promise ownership to key people, but may not be able to award it if something happens. And if something does happen, employees generally want cash, or their beneficiaries want cash if there were some promises made. Now, when a business loses a key person, finding a replacement becomes necessary. Employees become concerned. They start asking questions. Business earnings can be reduced. Customers also can start shopping around if they hear about that person is no longer there. And then if the business has an outstanding credit facility that needs to be serviced, that could be strained as well in terms of being able to continue to facilitate that credit. Now, if a key person were to die unexpectedly, the business will need cash. Cash to maintain profitability, make loan payments, pay bills, make payroll, continue to plan, etc. One of the primary needs could be the need for cash to find a replacement. Or in order to attract a replacement, you as the business owner might have to offer a higher salary or signing bonus. Now, here's some good questions to ask yourself when identifying a key person. Who do you rely on the most? Who runs the business when you're gone? Who's in charge of sales? Who's going to replace you when you retire? I know we all want to work forever, but hopefully that day will come. And who brings in the most revenue? And now, most importantly here, who do you really miss when they're out, right? These are all key identifiers. Now, as a business owner, when you realize you have a key employee and the business would suffer if he or she died unexpectedly, how can a specific value be placed on a key employee? We get that question all the time. Well, there are a couple of options depending on the situation. You have to keep in mind that if we do look at life insurance, these insurance carrier underwriters also have questions as to how do we come up with the value of that key person. As a rule of thumb, most underwriters typically allow businesses to buy about 5 times the key employee's salary as key person insurance coverage. It's a rule of thumb. We can go plus or minus on that, but that's an industry standard. Let's look at specifically 2 methods on the valuation of a key employee. So the first example is replacement cost. So if you think about it, is training required? Are those skills readily available? Right? That's a premium depending on the occupation or field you're in. If a replacement is found, are additional salary and bonuses required to attract him or her? Need to determine how long it's going to take to find and train a replacement and how much compensation a replacement will require. The next valuation formula looks at how much earnings will the business experience. How much lost earnings the business will experience before the replacement is found. A reduction in earnings could be used to determine the loss in company value. For example, lost sales, lower production, additional costs, and operational inefficiencies. There is something else too to consider on this slide, which is not on one of these graphics, and that is if the key person is also the owner. And that goes into buy-sell planning, which we're not going to cover in detail today. But in addition to these valuation methods, the amount of ownership that the key person has, if they're the owner, would also be included in this valuation. So it really depends on whether or not you have any ownership interest as to whether or not we would add that piece of it to the valuation. So one option you might consider when you look at funding is creating a sinking fund. Now, the problem with this option is that we don't know when the key person might die, and the concern of having enough of a sinking fund to cover the costs when the key person dies. A second option might be considering using current profits or cash flow to overcome the loss of the key person. But consider this. Business profits may drop when the business loses a key person, and trying to overcome the cost of losing a key person with your current cash flow may not be a viable long-term solution. Now, life insurance can be a good option to consider because if properly structured, key person life insurance death benefit is income tax free and it provides cash when the business needs it most. Let's take a look at some advantages to key person life insurance. Well, insurance will be there on time when you need it most via that death benefit. Insurance may help to preserve the company stability. And if it is permanent insurance, in other words, with cash value, it may accumulate tax deferred, and it's a corporate asset. It sits on your balance sheet. And of course, the income tax-free death benefit is very important. Now, when we structure these types of plans, we want to make sure we're working with your accountant or tax professional and attorney to make sure we structure this correctly. We want to make sure that you all know that we're not providing tax or legal advice, so we're not here to replace those professionals. We need them on the team. Now, the structure of the key person insurance policy is fairly simple. The employer, business, is the applicant, the owner, the premium payer, and the beneficiary. And the insured is the employee. The employer buys a life insurance policy on that key person employee. If that individual passes away, the death benefit proceeds are payable to the company since they are the beneficiary, income tax free. Now, a lot of people ask about the different types of insurance policies. We work with several of the top rated insurance carriers. We don't charge any fees for the placement of insurance. That's always good to know. It's a highly regulated insurance industry, and every insurance carrier has essentially two types of insurance policies. Term insurance might make sense if the business is young and cash flow is tight. If term insurance is purchased, you should review the coverage from time to time. If you would like to convert that term policy into a cash value permanent policy. And again, every insurance carrier also has a permanent cash value option, which offers some advantages. One is it has cash value, and it's a business asset. It sits on your balance sheet and can be used as you need it, providing flexibility and cost recovery. Unlike term insurance, yes, it's inexpensive, but that money goes out, and it's unlikely that that term policy will stay in force long term. That's the nature of term policies. The premium is level only for a certain term duration. So typically, there is no cost recovery for the company that buys it. Now, what happens to the cash value of the policy if the employee leaves the company? Now, there's a rule called insurable interest, and the insurance carriers measure insurable interest at the time of the application. They are not concerned after that key employee leaves the company. They are only concerned at the time of the application that there's insurable interest in the company. So you, as the business owner, could maintain the policy even after that person leaves and use that cash value for whatever purpose you deem necessary. Another option could be to use that cash value to fund other benefits for other key individuals. Or, and here's where that cost recovery piece comes in, you could consider surrendering the policy for its cash value. What happens if a key person retires? They're there for the long term, you did proper planning, and maybe you want to provide an executive benefit. So that permanent policy, unlike term insurance that goes away, could be used as an executive benefit or retirement bonus to that key person. Well, that concludes my portion for today's presentation. What I'd like to do at this point is turn it back over to Garrett.
Thank you, Jorge. I appreciate the update there and the deep dive into key person insurance. Excuse me. I know you did mention some buy-sell stuff. We can cover all of that. We didn't have enough time to go through all of that today, but we really appreciate your feedback on the presentation through our post-webinar survey. You are also open to request a complimentary consultation via the survey. We at Northwest Financial Advisors, in collaboration with Meritage Wealth Insurance Advisors, would be happy to help you establish key person insurance to protect your business.